Hello, I'm Michael Ruger. I'm the managing partner at Greenbush Financial Group, and today we're going to be talking about the new tax rules surrounding the ability to deduct home equity loan interest or HELOC interest. So we've been getting a lot of client questions about this since the rules changed with the new tax reform, and a lot of people in error are they heard the news and they're like, okay, I'm definitely not going to be able to deduct this interest going forward. That's not necessarily true, because when you look at the new rules, like when you take out debt and the collateral is that residence, there's two flavors of debt. The one is acquisition indebtedness and the second is home equity indebtedness. Now, knowing the difference between the two is what's really going to determine whether you can deduct the interest or not. So acquisition indebtedness, that's debt that's taken out and the residence is used as collateral, and it's to construct, acquire, or substantially improve that residence. If it falls under acquisition indebtedness, you may still be able to deduct that interest, because under the tax rules you have up to $750,000 in outstanding debt under that category that you can deduct. Now, if it falls under home equity indebtedness, which is basically everything else, you can no longer deduct it 2018 and going forward. So here's a quick example of acquisition indebtedness. So if I have, let's say, $100,000 in equity in my house and I take it out and I put on an addition to my house, that could actually be considered as a substantial improvement to the residence. So even though I took it out as a home equity loan, that interest may still be deductible this year. Versus if I take out that same $100,000 and I use it for tuition for my daughter or to consolidate debt, that's going to fall under that home equity indebtedness and it will not be deductible in 18 or years going forward. So we've already started to get some questions as to, will this essentially kill the home equity loan market? I don't think it necessarily will, because when you look at, if I need $100,000 from somewhere to pay for my child's college, and I look at all the sources I have available to me, home equity may still be the cheapest interest option, because when you get a home equity loan, the bank has your house as collateral. So if you stop paying on that, they've got an asset that they can come get to kind of pay themselves back. To where if you're looking at other sources that are essentially unsecured, like a personal line of credit or credit cards, those interests are typically higher. So even though people won't be able to deduct necessarily the interest, typically what you'll find is home equity loans have a lower interest rate than most other sources. So that's a big piece. Now, the other thing that people have to understand is a lot of the other changes to tax reform will impact this home equity loan interest issue, because home equity loan interest deduction is an itemized deduction, which means you have to itemize your taxes in order to gain the benefit. And with all the changes that they made to the tax reform this year, there aren't very many taxpayers that are gonna itemize. I think the Joint Committee on Taxation came out with a report at the beginning of the year that, based on all the changes, over 90% of taxpayers are expected to just take the standard deduction this year and call it a day. That's an increase up from 70% in 2017. And it's mainly because people's largest deduction is usually their property taxes and their state income tax if they're in a state that has state income taxes, and they capped all those at $10,000 this year. So if you have property taxes of 15, let's say you paid state tax of 20, normally you would have gotten that deduction of like 35,000. This year it's all capped at 10. So essentially, if everyone's capped at 10, you have to come up with $14,000 in other deductions if you're married to even get to the standard, because the standard deduction this year in 2018 for a married couple filing joint is $24,000, and for a single filer it's $12,000. I hope a lot of this clarification helps. If you have any other questions about the home equity loan interest, feel free to reach out to us at moneysmartboard.com. Thank you.